Thank you so much. My name's Philip Ngongo. I'm from Global Commodities Advisory. So my question borders around lending itself, because I think one of the challenges that we have in the Zambian market is it's not all that easy for, I'd say, the underserved. If I can pick one category, I would say smallholder farmers to access finance. And if you look around in the market, what has been happening in the past is the return on investment on things like treasury bills have been very high, as high as, say, 27% before the new government came in. But now they've dropped to somewhere around 12%. But we all know that financial institutions like banks, they price their loans in line with what they're getting from the government. And the conversation that we are having around impact investment, obviously, like, to me, I think I look at it as diversification on the side of the bank. But how does a bank get to diversify, to start giving money to people underserved, people like smallholder farmers, when the return on investment they are getting is very high? So this is a challenge that we have, and I think a lot of people are not talking about this issue. So, and I'm happy that we do have Bank of Zambia on the panel. And for us, we feel as long as the return on investment on things like treasury bills and bonds are high, it will be very difficult for institutions like bank to diversify, to start giving money to the underserved. So I think we just have to be clear on what we are looking for. And maybe I would like to get a response from the panel, especially Stanbic and Zanako. I just want to get an understanding on how they define risk, because most of us, when we talk about risk, we're only looking at the bad outcome. So, and risk there's so many things that you can say about risk, because if there's an opportunity for you to make money in the category which is underserved, like smallholder farmers, and there's an opportunity for you to make money and you haven't taken that opportunity to put in your money, you've lost money, that's a risk on your side. But there's also the risk of you losing your money when you lend to that category. So I just want to understand how you define risk as financial institutions, banks. Thank you.
Thank you. I think just allow me to sort of like summarize